on Monday. Tirthankar Patnaik, India strategist at Mizuho Bank, now joins us. Tirthankar, hi, good to have you on the show. The market has been underperforming, the global market, our market, clearly. Even on good days, we're not able to latch onto those good cues, and on bad days, we're underperforming anyway. Do you think there's a bit of a budget fear? And the follow-up question is, post-budget, do you think there's a risk of further sell-off in our market?
Well, there is a bit of a budget fear. There has been talk about the long-term capital gains on equities coming in and the STT. You keep hearing about it near the budget. STT remaining, and there has been also some amount of disappointment at what was done. There was no fair hike in the railway budget. Add to that the bank asset quality issues we've been having lately in the just concluded earnings season, and you have a slew of negative points that add to the global negatives, and there's no surprise why our markets have been actually trailing global markets.
Okay, the counter question is, can something be done in budget where fears are allayed and the market has a big rally? I mean, if we don't have, say, any move on the LTCG, if we don't have any other draconian move or so-called draconian moves, is there a reason or is there a ground for the market to rally from that point on then?
Well, if there is no adverse move on these LTCG and similar other draconian moves that the government is contemplating or that are being discussed, there will certainly be a relief rally. There is from an expectations perspective, the market does not expect too much from this budget. We see that the fiscal math, including the 7th Central Pay Commission, does become fairly tight. So, the arguments are whether we should go for fiscal consolidation or should we take a break. The economic survey points out that you could see a rethink on the medium-term fiscal consolidation path. From that perspective, the market will essentially see if the fiscal consolidation path is being adhered to. Are we really looking at a 3% kind of number in FY18? But the sense is that if the government is able to show that they will target 3% in FY18 along with the lack of draconian measures, we should see somewhat of a relief rally before we get back into our problems with bank asset qualities. So to answer your question, yeah, we should see some kind of a positive after the budget.
The other problem, Tirthankar, for this market has been the texture of stocks that have started to fall. Earlier it was ICICI Bank, Larsen and Toubro, ITC, these kind of stocks leading the decline. But now even some of the what you call the holy stocks, HDFC Twins, Kotak Mahindra Bank, even they are starting to fall. What do you make of that?
So not to comment on specific stocks, but the sense is, we've been having significant capital outflows from the Indian markets in equities. And the sense is that with the global environment being what it is, there is fairly low likelihood that Indian markets would, or Indian economy would move ahead or would, streak a path where other economies are not really going at this point. Add to that, as I pointed out earlier, are our own bank asset quality issues, which are unlikely to go away in a hurry. We've seen how for certain large private banks, the NPA numbers have been fairly large, the provisioning numbers have been fairly large, and they are expected to remain so at least for the next quarter. And it's very important that we use the word at least here, because given the economic environment, you might see NPA numbers coming in bad even in the first quarter of FY17. From that perspective, there's not much money to be made in the Indian markets at the moment, despite what we discussed, the relief rally, and therefore it's not a very big surprise that holy stocks, as you pointed out, could also see some kind of selling.
Okay, post-budget, Tirthankar, do you think it's back to global cues, or do you think domestically we could do something which could change sentiment and could lay the ground for the next round of rally? Or do you think this downward grind is going to continue?
See, if the budget gets the fiscal prudence math right, if the budget really puts the taxation, the tax evasion issues that we've had with the major companies, that issue behind us, if the budget does not do any kind of negative move on LTCG, STT at all, then we should get to global cues for the time being, and we should see a relief rally. the worries on bank asset quality are likely to remain. I guess that once we start the next earnings season, which will be mid-April or so, that's when we'll again see banks coming up with a lot of NPA numbers. In between that, we expect the RBI to cut rates by about 25 basis points. So there should be some more support coming in from the market from a reduced cost of fund perspective. But yes, from a medium-term perspective, we see earnings fairly weak at the moment, and so global cues will drive, but we will also have Indian cues that might drive the market lower.
All right, Tirthankar, thanks a lot for your time. Have a good weekend, and of course, we'll talk post-budget. So that's all the time we have on this edition of Taking Stock. Have a good weekend, and of course, we'll be back on Monday morning with all the budget action. Do remember that you have to watch the budget on CNBC TV 18. The top editorial team, along with all the guests, will be there Monday morning. So have a good weekend and come back with CNBC TV 18 for Budget Day.
First is continuing the path of fiscal consolidation. It's very important. Second is, I think there has to be a continuing focus on infrastructure spending. And finally, a little bit for the rural economy. I think that's low-hanging fruit for the government. And maybe they could do a little bit there to revive the rural economy.
We have seen 2-3 disappointments in the past in terms of budgetary, announcements and all. So I actually don't expect anything from the budget personally, but
First is continuing the path of fiscal consolidation. It's very important. Second is, I think there has to be a continuing focus on infrastructure spending. And finally, a little bit for the rural economy. I think that's low-hanging fruit for the government. And maybe they could do a little bit there to revive the rural economy.
we have seen 2-3 disappointments in the past in terms of budgetary, announcements and all. So I actually don't expect anything from the budget personally, but it is going to be a big. I mean, if you see the last speech of in the summit recently, it is looking as if something dramatic is being done in this budget.
There is a lot of tax already. On top of that, in this kind of sentiment, if you talk of another tax, which is long-term capital gains, obviously it will scoop fears in people's mind. And I just wish and pray that that something like that doesn't happen, because if that happens, I don't know what is the real long-term impact of that, but in the short term, it will be disastrous.
The markets will react to what choices we make in the budget. If the choice we make in the budget is related to, let's say, increased taxes, increased borrowing program, do away with capital gains tax on the stock market, and so on and so forth, then surely markets' reaction will be negative. If the government makes a dream budget like we had seen in 1997, then can the market take off? My feeling is that yes, the markets can take off. And I don't see a reason why we should assume that the budget will be negative for economy. It might as well be the trigger for being positive to the economy.